Hi, everyone. Welcome. My name is Alejandra Torres. I'm the content specialist at Silverhill Funding, and I'm so excited to welcome you to our webinar today, Closing with Confidence Investor Loan Solutions. We're going to be going over all our investor solutions, program guidelines, borrower profiles, and much more. It's a lot of useful information to help you close loans, but you don't have to worry about taking notes. We're going to be sending you the full recording tomorrow. So today I'm joined by our experts, Joe Altamonte and Gregory O'Connor, who will be giving you all a deeper look into the investor offerings that we offer at the Silverhill Wholesale Network. I'll let them do some quick intros before we get started with the presentation.
Hi, everyone. I'm Joe Altamonte. I'm a AVP of Business Development, working both on with the residential and our commercial solutions, and very excited to share with you a lot of these solutions today. And appreciate your time taken out of your busy schedules, especially late in the month. And we'll hope you get the most out of this. Greg?
Thanks, Joe. Alejandro, you were so formal in my intro. So Gregory is my full name. I go by Greg. But in any event, I head up the residential wholesale business here for the Silverhill Wholesale Network. And just to echo what both Alejandro and Zach said, really happy to have you guys join us today so that we can walk through our investor product solutions and hopefully provide you with some really valuable information.
All right, thank you, Greg. So one thing we want to set the stage for today is understanding the Silverhill Wholesale Network. We recently went through a rebranding, and if many of you are familiar with us, we do have multiple personalities currently, and over the course of time, we're working to put them into one comprehensive personality. But just to set your mindset straight, these are all us. Lakeview, Community Loan Servicing, and Silverhill Funding are all part of the Silverhill Wholesale Network. By some point by the end of this year, late third quarter, maybe early fourth quarter, we will roll these all officially under the Silverhill name. But for now, just keep in mind that when you're pricing loans and seeing these names in Loan Sifter, they are all the same company. So you'll notice that Lakeview will have our agency investor, conventional, and government loans. Community Loan Servicing is the entity in which jumbo bank statement and many of our non-QM programs are licensed. And then, in what's really something different for you is the ability through this network to be also able to generate small balance commercial loans and an alternative DSCR product through Silverhill Funding. So we'll make sure we're as clear as possible as we go forward. But again, one day down the road, hopefully sooner than later, this will all be under one Silverhill Wholesale Network package. So, the investor spectrum, we are designed for a wide range of investor profiles. And so depending on the borrower that you encounter, obviously you're going to try to align them with the right solution. So for the borrower is rate sensitive, and that's the sole reason they're calling you, the agency investor program is going to be the best fit for them. You're going to find the lowest rates, and our ability to securitize these at a margin that investors like gives us the ability to pass on those savings to the borrower. Now, we also have coming very soon an Investor Plus program, and Greg will go through some additional details on these, but we have expanded requirements that give us the ability to provide a non-agency solution to leverage AUS and enable agency underwriting solutions that you're already familiar with, but to an expanded group of borrowers. So that provides more flexibility as a broker. So that's an exciting program that is coming soon. And Greg, again, will get into a little bit more detail on that. And then for the alternative solution for borrowers that maybe can't show tax returns or don't want to show tax returns, I'll detail the debt service coverage ratio program, which is under our Silver Hill umbrella. And that's where we can forego DTI requirements and instead underwrite on a commercial level by debt service coverage ratio based information. So what makes us different than many of the other competitors and lending solutions that you work with out in the marketplace? Because we are secure, we securitize our loans on the secondary market, it gives us some flexibility, gives us the opportunity to offer consistently better pricing. We focus these on investors. So we want to be, as it says here, your first choice for investor loans. And oftentimes we can be because we have so many different options for your investor loans. So we have a wide range of solutions, and oftentimes you can come to us where we'll present it one way, and it turns out somewhere in the process that we can flip it to a different program and still not lose the client. So that flexibility really gives us a leg up in the market. And speaking of diversification opportunities, that's where our link to Silver Hill really comes into play, because when you have an investor and you've exhausted all the agency investor programs and residential investor programs, we can do an alternative solution with our DSCR program through Silver Hill. Not only that, many of these investors are also small business owners and may have commercial properties, and you still can utilize us for small balance commercial as well. So to be able, especially in this marketplace today, with rates doing what they're doing and the market so volatile, diversification is important as ever, and that's why we really think we make a great difference. So I'll turn it over to Greg, and he can take you through some of our programs.
Terrific. Thanks, Joe. Appreciate it. So what we'll do now is we'll roll through several pages to provide kind of the next level of detail on our investor suite of products. As Joe mentioned, and as we laid out on a couple of the preceding pages, right? We've designed the products to serve the needs of the entire spectrum of real estate investors. What we're focused on here are the 1 to 4 families, right? So these products laid out are for 1 to 4 family residential properties. Joe mentioned, and I'll just add that plug, there is a litany of additional investor products that we offer under our Silver Hill business for mixed use and additional commercial properties. And we'll certainly educate more on those in forthcoming webinars, as well as your AEs can provide you with information on those products as well. But for today's show, we'll focus in on this product set here and this spectrum. So as Joe highlighted previously, the agency investor product here in the first column, I like to refer to it as the product you know already and understand intimately. Right, this is a borrower qualified loan, leveraging the agency guidelines, AUS, etc. The specialty with us is, we are not delivering these loans to Fannie or Freddie. We are retaining and securitizing for the purpose of being able to provide you and your borrowers the best possible pricing. On the page in that vertical or in that column, you can see the basic attributes of the program with minimum FICO, maximum LTV, etc. I think we all know that we've got finance property limitations at a max of 10. That's in part where the Investor Plus product comes in. The Investor Plus product, as Joe noted on a previous page, is coming soon. This product is rolling out next week. So your AEs will have additional information that they can go over with you. And I'll touch on a few things here. The benefit of this product, while it is leveraging kind of the best of agency, specifically the AUS, to simplify underwriting, there are 5 key attributes that go outside of agency guidelines. So otherwise the loan would not be eligible for agency. And this is based upon what we have seen in the marketplace in terms of borrower needs and borrower profile needs. So a couple of those points are listed here on the page. One of the features of the Investor Plus product is it has an interest only and prepayment penalty option. That's really advantageous for borrowers looking to optimize cash flows. The product does allow up to an 85% max LTV with no mortgage insurance. It allows, does not require, but allows vesting or closing in the name of an LLC, right? The key to that is oftentimes you've got borrowers that are doing an investor loan that they have it already vested in an LLC, or they intend to invest it in an LLC, and to meet agency guidelines, they have to go through the time and expense of taking it out of the entity to close in their individual name, and then reconvey it into their respective legal entity, and that's time and money and expense. The Investor Plus program, one of the advantages is you don't need to do that. You can close it in the name of a legal entity or LLC. And then additionally, there is not a max finance properties limit of 10. We allow up to 50 finance properties. And the last point I'll say is we are not subjected to agency loan limits. So we do in this program go up to a max $1.5 million loan amount. And then the third column is the DSCR product that Joe mentioned. And this is where I'll say this product provides the most flexibility. Really, borrowers that can qualify for either of the agency product or the Investor Plus product also can qualify for the DSCR product. This is, as many of you already know, really a simplified version. It is not a borrower qualified loan, but rather a property qualified loan, and it's very simplistic to qualify. It is the debt service coverage ratio, which is the cash flows from the subject property, so gross rents divided by PITIA. And there is additional flexibilities around loan amounts up to $2 million, with max concentration up to $6.25 million. So what we'll do now is flip through a couple of additional pages just to add some additional kind of knowledge attributes to the products. So first one here on agency investor, we call it PLS, which just is a simple acronym for private label security. But in order for it to meet that eligibility for us, these two attributes on the page are applicable. So it is for loan amounts greater than 175 and amortization of greater than 20-year fixed rates. So think of it as a 25 or a 30-year. That does not mean that we don't offer or do loans below a 175 loan balance or less than a 20-year fix. Those are eligible. Those are just not securitized products for us. And therefore, our focus and advantage is, on the loans that meet the attributes above these levels. So, Alejandra, if you want to flip to the next page.
Yeah.
These are just the points that I mentioned before, but we wanted to make sure that they stood alone on their own. And again, this is the product that is newest in our suite that's rolling next week. So again, not only will you get this deck following today's webinar, but we will also have the product matrices and the guidelines out and available, and your AEs will be available to answer additional questions that you have on this product as well. So I'll just recap, kind of the advantages of this particular product. Loan amounts up to 1.5, so not subjected to agency loan limits. Borrowers can close in the legal entity. Max LTV of 85 with no mortgage insurance. Purchase, cash out, rate and term refinance. I personally look at this as one of the most advantageous options of this product is the interest only and prepayment penalty options, because that gives savvy, active real estate investors some ability to optimize cash flows, and then that nicely fits in with the number of finance properties. Alejandra, before we move on, I'll just step back and just think about, right, what's the simplest way to think about which of your borrowers will be best served by these products, right? The agency investor, the first product we talked about, I like to think about that as, again, the product you already know and fully understand, and that for kind of the smaller real estate investor, perhaps the person that owns or is active with, a few properties. The Investor Plus program, this starts to get into a, more active real estate investor that's got multiple properties, obviously, but again, is still a borrower qualified loan leveraging AUS, for underwriting and qualification simplicity. With that, Alejandra, let's go on to the DSCR product, the next page. DSCR is what I'll say kind of multifaceted. Number one, it provides the greatest level of kind of simplification in terms of qualification and underwriting. It also provides the greatest amount of flexibility to a wide spectrum of borrowers. So number one, right, we could have borrowers that are trying with an agency loan, but for one reason or another aren't able to qualify. Perhaps their DTI limits are not working for them, et cetera. And so there is a natural opportunity for those to be provided a debt service coverage ratio loan, because we're not qualifying based upon the individual borrower's income circumstances, right? So on the page here, we list a couple of those examples. And again, not to be redundant, but we've talked about perhaps they're not eligible for a regular agency investor loan because of the number of financed properties they have. Perhaps they're not interested in wanting to use their own individual income to qualify. So again, we've got the option of the debt service coverage ratio product. And then perhaps the most attractive, or one of the most attractive, is just the documentation simplification, right? So no need to produce tax returns or personal income statements. It is purely based upon the cash flows from the subject property. And on the bottom of the page, right, probably self-explanatory and known by most, if not all of you, but the difference between a traditional DTI calculation versus a DSCR calculation. Very, very simple arithmetic. Gross rents or market rents over PITIA is the qualification methodology. I'll give a little bit of a shameless plug. We have had some enhancements to our DSCR program, which will be out in the updated matrix, with debt service coverage ratio going now going down to 0.75. So that is kind of hot off the presses with some additional evolution to our product. We're constantly looking to provide you all an opportunity to be able to serve your borrowers and the unique profiles within kind of one family of options. With that, Alejandra, yeah, thank you. So a few details. I won't go through all of these program attributes. All of this is outlined in our product matrices. The one point that I do want to come back to that I didn't make, actually, the DSCR loan, importantly, is a quote unquote commercial loan. At the end of the day, why is that important? What does that mean? One piece or one point that I will call out that I think is really valuable and important to you all from an origination standpoint, they are not subjected to the Dodd-Frank loan officer compensation rules. So you have the flexibility not only through the program attributes to qualify more of your borrowers, you also have flexibility to be able to structure and price them in the most advantageous way. So you can charge points up front. You can also get, kind of old school, what we used to call yield spread premium. So you can get points on the front and the back, and it provides you just a breadth of flexibility in terms of how you structure them to be able to serve your borrowers' needs, as well as be able to, to optimize the structure for what you can make on a particular loan. This particular page just rolls through attributes of the program. The one thing that I just mentioned before on the minimum DSCR, we've got 0.8 here. And as I mentioned, hot off the presses, that is now being updated to 0.75. And again, I'd refer you back to your account executives and our product matrix to look at any of the other specifics around the program. So with that, we're going to roll into just a couple of case studies, and I think, Joe, you and I can kind of go back and forth on this. So if you want to take the mic and roll.
Yeah, absolutely. So In terms of matching your investor to the right loan program, it really comes down to the ability and how they are able to show income. So in a case where an investor fails a DTI test, they aren't able to secure an agency loan, it becomes a very good candidate for a DSCR loan through our Silver Hill program, because then we can use alternate means of underwriting, which does not include a DTI test. So that's a very good indicator of which way you should go. They could be a good fit for an agency loan, but they prefer to close in an LLC. That's why we're excited about the Investor Plus product. It gives them the ability to close in an LLC and keep them on the residential side where the rates can be a little bit more competitive, and a great solution for them as well. Tax returns become a very good indicator very quickly of what program we should recommend. So this one is very diplomatically worded. It doesn't show an accurate picture of their personal wealth. I like to throw up the air quotes and say they maximize tax codes. Whatever the case may be, when tax returns don't necessarily show, tons of income coming in, or shows a loss for the business, but there's cash flow, we can again underwrite the property instead of the borrower's income on a DSCR program. And again, we see this a lot. It's a lot of the reasons why some borrowers like to ask about portfolio loans to keep the number of mortgages down. But real estate investor has over 10 properties, they get cut off through Fannie Freddie. So we have options that give them the ability to work with us as well. Anything you would add to that, Greg?
Yeah, I would just say, Joe, thanks. I would just say, there may be certain borrowers, or you may have a circumstance where, look, the borrower has more than sufficient personal income from their tax returns or what have you, and they simply don't want to go through the process of having to compile all of those documents to go through kind of normal, conditions and condition clearing, right? So, there is versatility in where the DSCR program works. Right, and it really can serve any one of the borrowers across the investor spectrum. It really just depends upon what you and your borrower are looking to accomplish with respect to that transaction. So, but what we were laying out here, to Joe's point, is how do you simplistically think about our suite of products with the circumstances and what makes most sense for your borrowers? And so these are things that we see oftentimes in, kind of the spectrum of these solutions. Sorry, Joe, back to you.
Thank you. All right. So now that you are all chomping at the bit and want to get involved with us, I can't blame you. It's very simple. So first thing we could do is get you approved. So if you're not approved with us, if you are approved with us, and maybe you don't know who your AE is, you certainly reach out to me or Greg, and we can set you up as soon as possible. But if you're not sure, ask us. We'll let you know. And if you're sure you're not approved, then you can reach out to me, and we can get you started through a Convergence invite. And our process, depending on how motivated you are and how readily available your standard documents are, can take a day to 2 days. It all depends on how ready you are to get approved with your standard documents that most lenders ask for. We're no different. We can connect you with your account executive very quickly, and they can price things out. So one item to point out is that we will need you to be approved before you submit a Lakeview licensed or community service licensed loan product. You can submit a DSCR loan and get approved during the process, but anything that is on our residentially licensed entities, you'll need to be approved ahead of time. But in any event, we can connect you with your AE to get that relationship started, and they can help you price things and go from there as well. And then once you're set up, we start closing investor loans, and everybody's happy. So grow your investor business. Can't repeat it enough. the timing to diversify is now. And the folks, I applaud everybody for being on this webinar to learn different things. And hopefully some of those things have piqued your interest in enough to get approved with us. And I can help you do that.
Yeah, and Joe, just before we totally close out here, I would just add another kind of shameless plug here, right? What we've shared with you today, and in fact, not by design, but just because of the evolution, we're sharing with you the new Investor Plus product that's coming. We also shared with you an additional attribute or modification to the DSCR eligibility. I think it's important to note we are incredibly focused on ensuring that we serve you all and your borrowers' needs, and we're focused on continuing to look at expansions to our product set so that you have an opportunity to have confidence with with being able to leverage the relationship with us to serve the broadest spectrum of your borrowers. So with that, we'll thank you very much for your time today. And as Joe said, any questions that you have, certainly please reach out to your account executive. To the extent that you're not yet approved, you will get this deck with information, contact information for Joe and myself, and we certainly look forward to any questions that you have. And we thank you for your time today.
Yeah. So like Greg said, if you have any specific questions about your deals, just connect with us and we'll be happy to answer them. But yeah, other than that, thanks again for joining us today, and have a great rest of your day.
Thank you.
Thanks, Alejandra.
Bye.